In this video, we're going to take a look at probably 3 of the most common psychological problems when it comes to trading. Hello, I'm David Jones, and in this latest video with Trading 212, I thought we'd look at some of the psychological barriers when it comes to trading. In recent weeks, we looked at strategies such as money management, when to move stop losses, things like MACDs and divergence, but psychology plays an enormous part in trading. If you think about it, we all look at the same information, the same news, the same charts, the same markets, but some people are consistently profitable, whereas others just seem to have lots and lots of losing trades. So let's look at, I think, some of the barriers and maybe how we can try and overcome them. First of all, the fear of losing money, I think, is a fairly common one, and that's completely understandable because we're putting money at risk when we're trading. But if you have this fear and it stops you from doing anything, that's not particularly useful, of course, when it comes to taking on that risk. So let's try and put into some sort of perspective losing trades. Let's say over the course of a year, you do a trade a week. So we end the year with slightly more than 50 trades. And out of those 50 trades, 25 end up winners and 25 end up losers. Now, if you've got a half decent risk reward, let's say on the trades that end up losing money, you lose 100 quid per trade, and you make slightly more than that when you're profitable. You end up making 150 a trade when you're profitable. So we end up with a loss of 2,500 in this example from the losing trades, and our winning trades made us 3,750. So overall, we end the year up £1,250. Now, I think it's maybe difficult to see it that way in the beginning, but hopefully this does demonstrate, if you're going to trade for a period of time, that no one loser matters. So what is the outcome of this particular trade isn't really important. If you've got a strategy that you think gives you an edge in the market and will deliver more profits when it's right than it loses when it's wrong, there's no real reason to fear the losing trades. And even if you don't have that when you first start, and if you find a lot of trades are going the wrong way, you've at least got somewhere to start from where you know your strategy isn't working and you need to tweak it. So either way, losers can be very useful for us when we're trading. So in the great scheme of things, losing trades shouldn't really matter, and we can learn a lot. We can learn a strategy isn't working at this particular moment in time. Maybe we need to refine it. Maybe we need to think about stop losses. So losing traded trades can still be very useful. I think maybe a more common problem than you think initially is the inability to place a trade. So you've done all this work on coming up with your strategy. You've decided what markets you're going to trade, but when it comes to pulling the trigger, clicking the button, you can't follow through with that decision. And clearly, that's a real problem, because if you want to try and make money trading, you've got to place the trade in the first place. I think there are ways you can overcome this. Let's have a look at one idea. So here's our live account, and it's a short-term chart of euro-dollar, just going back over the last week. Now, you might take the view that even though we've seen something of a rally in the euro over the last few days, it's really struggling to get past these old highs. Maybe this is looking like a false breakout up here where it's had 3 goes of breaking through, but it hasn't done it. And then we have a bigger level up here around about 120.30. Let's open up our detailed trade box. Here we go. So I think one way to overcome this psychological barrier, just trade small. Let's trade the smallest we can. Here we go. We'll go in at 2,500 is the size we're going to trade here. And then, of course, set our stop loss. Now, the market has struggled in the past with this whole 120 to 120.30 area. So let's put our stop loss up above there and see just how much we're risking. Let's say we're going to put our stop, if we're going to sell, we're going to put our stop up maybe 120.45, that sort of area. So we're placing our stop before we place the trade. There we go, 120.45 and a half is where it's gone in. The market's currently trading there, 119.90. We're going to sell 2,500. And look at our risk. Our risk in this example is just over £10. So I think this is a really sensible way of maybe coming over or getting over that psychological block of placing a trade. When you're trading, there's no rush to start trading big. Just start trading small. We'll confirm the sell. That's it. Our trade's done. it's in there, euro dollar, zero spread. We sold 2,500 at that price. Our stop loss is in, and we're up a massive 4p already. But it's a way, I think, of having a calmer view of trades, trading at a level that I think in the beginning at least, that doesn't mean much to you. I think you can get over this initial fear of placing a trade. I'm a big fan of trading with a small amount of money in the beginning. I think demo trading has its place and it gets you familiar with how a platform works, but it's completely different when you're trading with real money. So if you're having a problem, start really small. Trade the smallest you can. So any particular risk on the trade doesn't really matter. Now the third psychological problem, it's one we have looked at before, but I think it's worthy of repeating. It's maybe the fear when you're in a profitable trade that the evil market is going to take your profits away from you. So you maybe want to snatch those profits a little bit too quickly. Let's just walk through again how we want to deal with that. We covered this in a bit more depth in the session on moving stop losses, but let's say we've bought in here and our initial stop loss is in there and we're looking for a move maybe all the way back up to this sort of zone. We shouldn't be panicked when the market is here into moving our stop loss. We should actually be relaxed about this trade because it's heading in the right direction. Maybe when we bought, our stop loss was 30 points away. It might have moved 30 points in our favor. So there's no reason to worry at this stage about the market taking the profit away from us. We should be grateful that it's worked out as we thought it would, and rather fearing that our profits are going to disappear, we should be hoping the market continues to move in a direction and our profits increase. So it all goes back to this lesson of not being too keen to move your stop loss right at the beginning of a trade where it starts to go in your favor. So when a position is going in our favor, we should be happy that we seem to have made the right decision. The market's moving the way we thought it was. Don't take that profit too quickly. If your stop loss is 30 points away, wait for the market to move a decent amount in your favor. Don't be in a rush to move the stop to break even. So that's a quick video, I think, on 3 common psychological problems. We'll come back to this over and over again because it plays such a big part when it comes to trading. But for this week, we'll start to wrap things up as usual. If you have any questions or comments about what I've covered today, just leave us a message in those comments down below. If you like the video, click the thumbs up. And if you're not subscribed, if you click the subscribe button that should be there, you'll get automatically notified when we upload the next video. But for now, we'll leave things there, and I hope you have a good trading week.